Today, Lynette, Zang, and the Great Reset. Hello again, it's Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian and international flavour. One of the things I've tried to do on the DFA channel is to provide a range of voices and opinions so that you can become better informed and therefore make better decisions. And that is continuing today with my conversation with Lynette Zang from ITM Trading. Lynette is a long-time analyst and has some very strong views about what's really going on in the financial system, and specifically around this concept of the Great Reset. So today, I had the chance to explore that concept with her. It's my great pleasure to introduce Lynette Zang. Hello.
Oh, I'm so glad to be here, Martin. Thank you for having me.
It's great to have you on the show. And of course, you're from ITM Trading, very famous podcaster from the US, a lot of excellent shows that you put out. And I have to say that every time I listen to what you say, I always learn something. So I hope we can learn something today in our mutual conversation.
Well, that's good because I learn something every single time I do all my research. So yes, I definitely consider myself a lifelong learner.
It's always good. Yeah, there's always more to learn. So look, I really want to go right into the deep end here, right? And basically say, my theory is that we have too much debt, global debt, right? We've got debt all around the world. We've got massive debt in the US, everywhere you look, household debt, corporate debt, maybe government debt too. Are we indebted?
Well, absolutely. The debt is not payable, but yet that's how money's created in the system, and it's also what bails out the system. So yes, we are definitely way over. If you can't pay your debts, you're over indebted.
Right. And, this is something which has been growing for a generation or two, right? So what changed? Why is it that we've suddenly had this acceleration of debt, do you think?
Well, if you're referring to the last 10 years, there are a lot of things that happened, but it really started back in the 70s when in the U.S., President Nixon handed over all the power to create inflation to the central bankers. And what do central bankers know? They know debt and they know interest rates. And that's really when the shift began. And you can look at any chart you want to, and you're going to see that as we were kicking off in the early 80s and through the 90s, that's when the debt really started to spike. And the other thing that you can notice when you look on particularly like the central bank graphs will show where those recessions, the official recessions are. And what you notice when you look at those charts on the debt is every single time that we hit a recession, the speed that we grow the debt accelerated. And that's why I said that debt is used to bail out the problems or the recessions or the corporations and the governments of the past. And so 2008, quite honestly, the system that we had become accustomed to died. And what the answer was debt that goes like that.
Right. So, this is very much then driven by central banks and the way that they think about the economy and the way that they try to manipulate the economy, right? That seems to me to be, is that right?
Absolutely. And I'm going to add one more layer in there because I think it's significant. A central bank, in most cases, is not actually a government entity. It is in China, but in most cases, not a government entity. It is actually a private corporation. And so you've got private corporations that are dictating this debt. And they really are not about taking care of the public. They're about taking care of the other private corporations, not exclusively, but typically banks, commercial banks.
Right. And of course, in Australia, the RBA, the Reserve Bank here, is actually part of the government. So it isn't actually privately owned. But certainly in the US, and people perhaps internationally may not understand that, in the US, the central bank is an independent entity. It is actually, disconnected from government, isn't it?
Well, I wouldn't say it's fully disconnected, but yeah, it is a private corporation, and they are supposed to be independent.
Right.
Not so sure that that's exactly true, but
well,
yes.
I was going to say, President Trump has been breathing quite heavily, and perhaps trying to influence the central bankers and saying, it'd be really nice to have interest rates a bit lower again.
Right, and to be able to have control over the value of the currency, which is still very much in line with central bank control.
So one of the things I'm interested in is the fact that we've got all these central banks around the world who are following a similar line, which is essentially to say we need to take interest rates lower, or we may even need to do quantitative easing, or in some places negative interest rates if you look in Europe and even in Japan. There seems to be, if you like, groupthink amongst central banks and central bankers. And of course, you can talk, I guess, to things like the IMF and to the Bank for International Settlements and the Financial Stability Board, all of whom are partly responsible for this consistent and, I think, myopic approach to dealing with the economic issues that we face.
Well, absolutely. But that's because the interest rates are the key tool that they have. And, in theory, which is not, it's been partly in practice, but not necessarily so. When you lower interest rates, it increases demand for credit. And then in the theory about stimulating the economy is then that people borrow more money and they go out and they spend that money. And then, of course, that stimulates the economy. But, actually, with interest rates being this low for this long, that demand has already been fed. So now going to the negative rates that you talked about, and I think that's going to be a global phenomenon because you've got most of the world anchored somewhere near zero. When they actually, on average, drop interest rates 5 to 6% to inspire people to borrow. So at the levels that everybody's at, that means this next crisis, we're going negative.
All right. Well, let's just touch on where we currently are. So in the US, I'm very interested in corporate debt and the fact that with rates being so low, many corporations have been borrowing at low rates, but not for productive purposes, but simply to buy back shares to lift effectively the value of those shares. That's true, isn't it?
That's absolutely true. Yes, yes.
And so what are the implications of that in terms of, in corporate land? I guess exposed if rates were to rise. But what does that say about corporate America as well?
Well, that's a really interesting question. And let's look at it. And let's look at it for a minute from the perspective of, say, a pension plan or a retirement account. Because what has really been happening has been risk transfer from the few, from the elites, from the heads of those corporations that are taking on debt to purchase their shares or to pay out big dividends or even for big bonuses. That wealth actually leaves the company. In the meantime, you have what the institutional investors. And the reason why I do that is because they're people that invest other people's money. And therefore, it's the other people, meaning you and me, that will ultimately be most impacted by these choices. So now they've taken on more debt when it would have made sense for them to retire debt at higher rates, which I'm not saying they didn't do that. They did, but they took on additional debt beyond that. Now we've got a global economy that's slowing. How will these debts be repaid? What we've got is the rise of the zombie corporations that should have gone out of business. If this was really a true capitalist system, they would have gone away. But so you've got really the banks not wanting to take these bad loans on the book and put this corporation out of business because then it looks bad on them. So just keeping them alive. But when we get to the point where that cannot happen anymore, which I think we're very, very close to that actually, then it becomes apparent. But who's left holding the bag? The balance of the shareholders, which is significantly in retirement plans of some kind, pension plans or, 401ks or any of these retirement plans, because people don't really understand this. They don't pay attention to any of this. So that makes the problem. I mean, we've got a global problem with retirement anyway. Well, let's blow that up. So really, a lot of this is about taking the wealth out of the corporations so that there's really nothing there to weather the downturn. But it's the mom and pop that pays.
So that risk transference. So I think this is really the nub of it, right? Because I remember listening to a couple of people from the Bank of England talking about this, and they basically said, look, you've got to recognise at the end of the day, the only people left are actually consumers, right? So one way or the other, the consumer is going to pay. They're going to pay either through the fact that banks are bailed out, or they're going to pay because essentially, their superannuation goes down, or their pensions goes down because of all the things we've been talking about. But ultimately, there is no other source of rectification. So in a way, on the upside, the corporations win. On the downside, it's the rest of the community that loses. And that seems to me to be a fundamental, issue and disconnect. And by the way, it's not really massively talked about. And yet it seems to me this is the real issue, I think, at the heart of what we're seeing at the moment.
Oh, I would agree with that 100%. And I mean, you listen to them. The consumer is strong. The consumer is strong. The consumer has taken on so much debt that I don't know how strong that consumer is. And with a little bit of wage inflation, that's why wage inflation is so important, because that's going to help the consumer continue to shop and take on debt.
Right. So we've had an interesting development down here in Australia where effectively suddenly the Reserve Bank has cut interest rates and they've reduced the lending standards to encourage more debt again, right? Despite the fact that we've got some of the highest debt anywhere in the world at the moment in consumer land, particularly around mortgages. So it seems to me that once again, the debt lever is being pulled to try and effectively stimulate the economy. Now, the issue about that is, as we said, that's unsustainable. So what are the strategies that should be being used, do you think, in terms of tackling the fundamental issues that we've got, economically speaking?
Well, I think that's the whole point of the reset, isn't it? Because the current system, the way it's structured, where everything is based upon the constantly compounding debt, they don't want you to retire debt. They don't want you to pay it off, because when you do, effectively, you're burning money. So it's not about ever paying that debt off. Well, if the system doesn't work anymore, you need a new system. And that's what the reset is about. But that's the way that an advanced government goes bankrupt. They simply obliterate their currency's value, and then they repay that debt with currencies, that fiat currencies, government currencies, that have zero value. And in the meantime, the population is living through a hyperinflationary event, and all confidence is lost in, that's really what scares them. That's what keeps central bankers and governments up at night, is that loss of confidence in them and in their financial system. And then you end up doing, at least for a minute or two, a bartering system, because all confidence is lost until they put the new system in place. And my work is about education, because if even 3% of the population understands what they're attempting to do, my goal is to have a more fair monetary system. That's what my goal is. If they just run roughshod over us, the new system is not going to be any better for us than the old system, and probably even worse, because they want us to go into a sharing economy, meaning that few owns everything and everybody rents. Everybody else rents.
So you talk about the Great Reset and a need for a new design. What are the fundamental parameters of that new design, and how do you see it playing out?
Well, for one thing, they need to get rid of cash, or at least discourage the use of cash. And so what the central banks are proposing, and they want distance between their policy and how it's rolled out to the public, because there's backlash then if we know that they're doing it. So part of what they've been talking about seriously, I mean, they've really been talking about this for a long time, but quite seriously since 2015, is how they would eliminate cash within weeks, just like that. And that's by charging a fee to commercial banks at the central bank window. Well, you and I, it's invisible too, because they can subsidize it and then roll it out slowly to us. But once we voluntarily give up the cash, because in India they tested what if they just took it away, and that didn't work very well. So they want us to volunteer. So the way they're going to do that, and they've mentioned this in quite a few papers, is by charging a fee at the central bank window that then gets transmitted to us when we go to, say, out for coffee. And if you use an electronic form, a debit card, a credit card, something like that, it's $5. If you use cash, it's $6. So what are you going to probably do? You're going to use your debit or your credit card. Okay, so it's actually pretty simple for them, especially where everybody, the banked world, that's why it's so critical for them to get the unbanked into the system as well. But for those that are banked, it's going to be fairly easy to get them off the cash system. And then they state, once that's accomplished, which they can put in place within weeks, their words, not mine, then there's no limitation to how low below zero that they can go. And just to kind of, I don't know, I might be redundant to your viewers, but negative rates are really about attacking principal, right? You're loaning somebody money knowing that you're not going to get the same amount that you loaned them back, let alone any interest on it. Other than your children, who would you do that for?
Well, of course, the thing about negative interest rates is that what they're doing is giving money to banks and basically charging those banks a fee if they don't actually lend it on. So it's basically a stimulatory process to try and actually force the banks to lend. Unfortunately, in Europe and other places, it hasn't necessarily worked that well. But your point about...
Well, it hasn't, and now you've got negative corporate rate, junk bonds that are negative. A junk bond is below investment grade. You're not getting the money back. I mean, come on what planet does that make sense?
Yeah, well, certainly it begs a whole bunch of questions. But I want to come back to this digitalization because, I've been talking about this as well. And I've been very concerned about the fact that we've been sleepwalking into a digital currency future where effectively, we're just slowly giving up more and more of the freedoms that we're used to serve what purpose? And that purpose, as you say, is partly about greater control. Also, of course, there'll be more information in the system, so people will be able to actually, give up more of their freedoms and perhaps their personal information as well. And yet we seem to be just happy to walk into this future. And, it's facilitated by the digital devices that we love, and it's facilitated by the ease of use, all those things. But I think, people need to be very careful because there are some very important warning signs here, aren't there?
Oh, my goodness, yes. For governments, one of the things that they've been talking about is their ability to do a lifetime tax. I mean, so you have a good year this year, you have a bad year that year. Oh, no, we'll just mush it all together. And if everything's digital, you don't get to choose when you pay that tax bill. It can go out of your account just like that. For corporations, it's pretty easy for them. I mean, the artificial intelligence and I don't mean to sound like I am not for progress, but I think the cost to our freedoms and our liberties is not worth the convenience of being able to just hold your phone up to pay for something, or to hold all of your financial life in one easily accessible place. Even if governments have the best intention, or central bankers have the best intention, there are a lot of hackers out there that may not have such great intentions for you, and yet it's easy for them to access everything about you. Yeah, it is. It's about taxation and it's about control.
So one of the things that I've seen quite often being said is that, well, of course, the antidote for this is actually, crypto, and it's, the private digitalization of currency. So where do you stand on that? And I'm interested particularly in terms of the Facebook sort of, asset-backed cryptos versus the the Bitcoin, which of course is based on algorithm and trust.
Exactly.
What are you seeing?
Well, first of all, I think it should be pretty obvious. Anybody that's watching Facebook and the Libra and the grilling they're getting on Capitol Hill, there is no way, I will put my neck on the line, there is no way on God's green earth that a government and or a central bank will give up its money monopoly. It's too important to them. And they're not going to go, oh yeah, we've had a great run, now it's your turn. So that's one thing. I think that ultimately it will be a digital currency, but if you look at the Bank for International Settlements, they have a money flower on there, and you can easily see that there's a little teeny area for private cryptos, which probably would be used for the underground economy. But physical gold and silver, the commodity currencies, have the largest area that are both universally accepted and peer-to-peer that are completely outside of central bank control. So I am not personally a fan of the cryptocurrencies. I don't see them taking over for the government fiat. I mean, they're just not going to allow that. And for those that think that it goes around the system, if it goes on the grid, if it goes through a computer, which it does, goes through lots and lots of computers, look at China. They control that. So you think they're the only ones that can do that? I mean, come on. It's not logical. So I do think we're going to end up with a digital currency, but it's going to be a central bank currency. Could even be the SDR, which the IMF has talked about having the special drawing rights, which is the IMF currency that is just created, boom, like that, not even from debt. They don't have to do anything to create it. They push a button and there it is. But they actually have talked about having a retail SDR, which would be something that you or I would use as world money, as well as a wholesale SDR, which would go to the commercial banks and corporations, et cetera. So I think that's where we're headed. And I think that the only way to really protect yourself is to have physical gold and physical silver, like real money that is completely outside of the system and near you, so that when you need it, you've got it.
Right. So, we have a lot of people down here in Australia who are actually buying silver and buying gold for those very same reasons. But I guess the question I've got, and I sort of wrestle with this a little bit, is, of course, if you think about the options and futures trading, particularly on gold, right, that it's actually many, many times bigger than the amount of physical gold in the system. So in a way, isn't gold actually fundamentally influenced by those same market forces and, the same position taking and all of those things? So, I always wonder how much more secure is gold, say, relative to other commodities or other currencies and even interest rates, because it's all part of the same trading system, isn't it?
Well, it is. And actually, part of the problem is it's called perception management, where they guide you in how they want you to think. So when you look at the spot market, you think, well, that's the gold market, or that's the silver market, or that's the oil market, right? But what that is it's a trading mechanism specifically originally with gold designed to control how people approach gold. In reality, when they do the reset, well, how do you reset something? You take something that has no intrinsic value and you revalue it against something that is all intrinsic value. One of my personal pet peeves is when I hear people say, well, gold has no intrinsic value. Pardon me, but physical gold and physical silver are used across the entire swatch of the global economy. So they are used in manufacturing, they are used in the monetary system, they are used in art, they're used for jewelry. They both possess qualities that they have not been able to duplicate in the lab. Therefore, they always have demand. Unlike fiat and those products you were talking about, they have use in one area. That's it. So when demand in that one area goes away, you have no market, and your wealth, if you're buying like an ETF, a gold ETF, you're buying a contract, you're not buying gold. So physical gold held in your possession and physical silver as well, outside of the system, and that's the way they actually do the reset is against gold, because that's the primary currency metal. And then gold goes somewhere near its true, what I call its fundamental value. So yes, it's very easy to manipulate and manage the price. In this country, you buy the options, a central bank will pay $110 to control 500 ounces of physical gold. Easy to do, easy to control, until they need it to go to that fundamental value. And that's why personally, even though I pay attention to it because I know that people are looking to me for guidance, I don't really care what the spot market says. Me personally, I buy it. I just buy it as consistently and regularly as I can. I bought some at 1900 and I know it was undervalued then. I bought some at 11. Oh, heck, I bought some at 250. You know, it doesn't matter because that's putting value in the fiat. And the true value in gold and silver, honestly, is in its full utility. And when they do the reset, I mean, that it's not like you've got a whole bunch of different ways that you're going to reset a currency. There's one, and that's against gold. So yeah, just keep accumulating it. And then at some point, when the government needs this whole thing to implode and the currency to go to zero, that's when they do the revaluation. I mean, look at Venezuela. It's up, I haven't looked at it just lately, but I think it's up something like 35,000 times or something like that. Mm. Of course, that was after they confiscated it too. But
okay, I've got two questions to follow up from that. Firstly, you've mentioned the they several times, right? You know, they're going to do this. Who's the they you're talking about?
Okay, I am typically always talking about central banks and governments, because they're the ones that want to remain in power, and they are the ones that can control this at this juncture. Right.
So basically, your central thesis is there is a plan which essentially they are running.
No doubt.
Right. Okay. So this isn't.
You can read all about it.
Yeah. So that was my point. So this isn't just happenstance. This isn't just them reacting to events. Your thesis is that there is actually a plan, and it is actually a reset plan eventually. Right. That's where this is going.
Oh, absolutely, absolutely. Right. And they knew it in 2008. You know, I mean, absolutely, 100%. The system died in 2008, and QE and all the garbage that came afterwards was putting the system on life support till they could get into a position to reset the whole system. So yes, I mean, and their plans, probably not all of them for sure, but there's a lot of documentation on the IMF website, on the Federal Reserve website, on the Bank for International Settlements website, I'm sure on, your central bank's website. I mean, they do have to publish these documents, but how many people actually read them?
Sure. Yeah.
I mean, I do, but I'm a nerd.
Well, yeah, there's plenty of material around, and some of it's, I think, quite ambiguous, and some less so. I mean, I've always tended to have the cock-up theory of history that people actually look for conspiracies, and often it's just happenstance. But there seems to be an alignment of events, right? As we said earlier on, if you look at what central banks are doing, if you look at the way that they're thinking, that suggests perhaps there's more than that going on. My other question relates specifically to gold and the fact that countries like China and Russia have been buying up gold really big. What's your read on that, and how does that play into this?
Well, it's huge because you've got to follow the money. So when you look at their gold accumulation, and they're certainly not the only ones. I mean, the last 4 rolling quarters, you've had a broader array of banks buying gold, and we're not talking about the contracts. We are talking about the physical. So they've been accumulating because what gold does, what it's supposed to, its most important function is to hold its value, hold that purchasing power. So really what we're experiencing is a shift in power from the West, so from the US, to the East, to China and Russia and India, etc. And, since the US has the official title, it's not accurate anymore, but the official title of the world's reserve currency, which is a huge advantage because up until, 2002, we were already having to buy back our own debt. In 2005, Russia said you're not going to value our assets in terms of dollars anymore. So this has been evolving. But up until this shift, if you were going outside of your borders to buy anything, lumber, steel, oil, anything, you had no other option but to do it with US dollars. So we do, at this juncture, I think we still control most of the payments that flow through the world, but that has been shifting as well with China and Russia, and even the EU, which is an ally, and India, which is an ally, but they've even created workaround systems to bypass the use of the dollar. So for us in the US, this next crisis is going to be probably far bigger than anywhere else because, really, we've been losing our status as the world reserve currency for a while. And those dollars that everybody else has been forced to hold will be coming home. And they've set up mechanisms to try and modify that. The IMF has in their substitution fund, where you would deposit the U.S. instruments there, loans, bonds, whatever, and then they would convert them into SDRs. And then so they could, at least in theory, control how quickly most of those dollars came back to the U.S. So maybe they'll try and hide it. But this is definitely a plan. They know it, and they're getting in place. And I hope individuals are too. I know I am. Food, water, energy, security, community, which is really, really key. And then shelter, barterability, wealth preservation. It's those last two, the barterability. I use silver for that mostly, not completely, kind of depends. And then wealth preservation and gold. That's why the central banks are buying it. And that's why you should too. Everybody should.
Okay, so here's the question. Let's roll the plan forward, right? So in 5 years' time, describe to me what you think the US economy is going to look like and the global scene. How's it going to look like? How different from today?
It's going to look very, very different from today. I mean, I'm already seeing significant cracks in the system, and the central banks are out of firepower. So, in 5 years, I would say that we would definitely be in the midst of hyperinflation on a global basis. It's not just the U.S. This is everywhere because we have to burn off those debts. We have to burn them off. So in 5 years, my bet would be we will be in the midst of hyperinflation. Okay.
So basically, the devaluation of everything that we expect, the fact
the paper goods.
Yeah.
Right.
So yeah. Which is why then you're arguing you need an alternative strategy to be able to deal with that hyperinflation world.
Absolutely. I mean, so I bought my current property in 2010, and I've converted it to an urban farm because food is the biggest issue. Now, not everybody's going to do that, but you have to make sure that you are secure for your food, whether it's, growing something that's standing, or even taking a big bag of sprouting seeds, or doing a big garden. But food becomes the single biggest issue for most people. And I also want people to understand that anything at all that's physical, even a coffee mug or toilet paper, is actually highly barterable, and so are your skills. So, yes, I think this world's going to look very different. And I think you need to think about, what do I need to be okay? What do I need to make my family okay? And that goes back to that food, water, security, etc. And wherever you feel weakest, that's what you need to be working on until you feel like, okay, I got this up to a certain level. Now let me go work on something else in that realm.
Okay, so as we sort of come to the end of our conversation, I've got one last question. ITM trading, what's it there for, and what are you trying to achieve?
Well, personally, I have been groomed for this moment in time when I just look at my background. So my personal goal and my personal mission is to translate financial noise into understandable language so that people can make educated choices that puts their best interests first. What a concept. Everybody here, I've been studying currency since '87. I've been studying trends on tangibles thanks to my uncle, who was a major antique dealer. So he's the one that taught me about the trends in the tangibles versus the trends in the fiat. I've been a banker and I've been a stockbroker, so I understand that language. Here, we're trying to really I created a strategy before I ever got here, but everybody here has been trained in that strategy, and it is simply based upon normal, repeatable patterns. Everybody says they want to buy low and sell high. So there are patterns that you can look on a chart and a graph, and that's a lot of what my work is about, is teaching people how to, boom, recognize patterns so nobody can pull the wool over their eyes. So our goal, we create strategies for individuals, and we do sell physical gold and silver because that is, at this point, the single best way to protect yourself along with everything else. But our mission is to help people not just survive what we've already begun to go through, because we've already started the reset process, but to actually thrive on the other side of this. Because right now you've got gold, real gold, that is severely undervalued, and we're seeing what's called a cup formation, which is a very powerful accumulation pattern, where the people in the know, the smartest guys in the room, are quietly accumulating. They don't want you to, but they're accumulating. Well, when this huge debt bubble really pops in earnest, and we're already seeing it starting to pop, then all of those overvalued real assets like real estate, the physical things that actually have some intrinsic value, those will drop as the price of gold in terms of the currency rises. So if you have fixed rate debt, there's part of the strategy that, boom, pays that off for a fraction of what it would cost you in terms of fiat today, but also puts you in a position to accumulate all of that real income producing wealth that is right now highly leveraged by these corporations, thanks to all of the free money printing and interest rates. So we like to work with individuals on a one-on-one basis to help them not just, as I said, survive this, but actually to thrive. So on the other side of this, this is all about wealth transfer. Have that wealth transfer your way. All you have to do is do what the smartest guys in the room do. And it's just repeatable patterns. So that's what we do here. And that is our mission, is to help people.
Okay, well, I've really appreciated your time today, Lynette, and some very important messages, I think, there for people who are watching the show. Things are uncertain. The uncertainty is definitely going to continue, and I guess the point I'd like to make is don't necessarily take the mainstream media's view as to what's going on. Do your own research, understand, and follow the messaging and the information that's out there and make your own plans.
Absolutely. Absolutely. And, truthfully, when you're looking at patterns, it doesn't matter where you're looking at or what you're looking at. So this is a global thing. But if you can figure out, even without having to do a tremendous amount of due diligence, just look at what the smartest guys in the room are doing for themselves, and then ask yourself, how can I emulate that? Okay, obviously, there are ways to do it on a budget as well. But if you can put yourself in the same position as those guys, you are much more likely to be on the right side of this. And in my work, if anybody goes, I've got a YouTube channel, ITM Trading, once you go into YouTube, or you can use my name, Lynette Zang, and you'll find that I list not all of my research links because that'd be a book, but a lot of the research links, so that I try and make it easy for you. I don't want people to have to do a lot of work on it. Here, this is some of what I'm reading. If you have a different opinion than me, okay, but this is how I formulate my opinions.
Well, thank you very much for your time today, and very, very interesting themes that we've explored. And perhaps we can touch base again down the track and see how things are developing, because I think things will be moving quickly.
Oh, they are definitely moving quickly with the inverted yield curve. The yield curve, oh my gosh, yes, is very interesting right now, moving very quickly. And I'd love to come back.
Good to
Need
talk
to
to
come
you.
and see you in person, actually.
Well, Australia is a wonderful place.
I know, it's Australia and New Zealand are on my bucket list. It's like some of the last things that I've not quite done yet.
Well,
so I'll make it there.
You'd be very welcome. I can tell you that, the sun is always shining here. Well, almost always. But unfortunately, we also don't necessarily understand what's going on, economically speaking, very well. So you would make a significant impact if you were to spend some time down here.
Well, I would love that. So we'll have to figure that one out. But yes, it's my pleasure to be here. Thank you so much for having me on.
Good to talk to you. Thanks very much.
My pleasure.
So there you have it. A really interesting perspective from Lynette there. And, you have to, I guess, make a decision as to whether you think there is a conspiracy going on, or whether you think what's going on at the moment is, frankly, random happenstance based around the reactions to the current events as they're playing out. I'll leave you to decide which you think is most likely. In fact, leave your thoughts in the comments below. Are we facing a conspiracy, or is it predominantly a cock-up? I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.